Thank you for joining us on our Free Up Storage Eustis offering webinar, which is a ground-up development of a self-storage facility in Central Florida. My name is Ryan Gibson. I'm the Chief Investment Officer and President here at Spartan Investment Group, where we are going to dive into our new ground-up development of this 606-unit climate and non-climate controlled self-storage property in Eustis, Florida. Before we get started, I did want to talk about the way that you can subscribe to the offering. So currently, if you can scan that QR code, that's going to land you on our investor dashboard, and you can sign up for Spartan Investment Group's offerings by creating an account and logging in. But once logged into the dashboard, you're going to see a deal room like this under Free Up Storage Eustis. And right here on the bottom right, I've highlighted where you're going to find all the offering documents pertaining to the investment. The offering memorandum, the projected financials, the underwriting, the PPM, the operating agreement. Anything that you want to know about due diligence is all going to be in this room. If you'd like to start the investment and actually take the next steps and subscribe to the offering, you're going to click this Start Investment button there, and you're going to see that gold on your screen. And then that way, that'll walk you through the process, a 4-step process to sign up, sign the legal documents, and that's going to then provide you the opportunity to go to the accredited investor letter and sign the paperwork and get the funding instructions so that you can send in your funds and ultimately do the deal. Now, for those that are just joining us now, we're going to go ahead and send out an email that talks about how to register for the investor dashboard. So I see a lot of new faces here on the webinar tonight. So you're going to get an email inviting you to this investor dashboard. So if you take a look at your email now, you should get an email from investors@spartan-investors.com. It's going to invite you to create a password so that you can gain access to our deal room. And this ultimately is how you take the next step to subscribe by using this deal room. And everything discussed tonight in the webinar can be found here on the investor dashboard. And there's a QR code on the screen, like I said, to take you to the investor deal room. If you get caught up in the process, you can simply reply to the email you received from our investor relations team, or you can always email me at ryan@spartan-investors.com, and I can answer any questions that you might have. Now, we did put out a video on this project, and I thought it'd be a good, appropriate time to play the video. It's about 3 minutes, and it goes over the investment and kind of shows you an overview of the property. So it gives you like a drone footage, and I talk through why we like this investment so much. So I'm going to go ahead and play that video now.
Our market criteria was land in an area that had really strong population growth, a great location, specifically high traffic count, and a ton of demand for self-storage. We also wanted a property that fit within our existing footprint for the properties in the Florida market. Well, we found it. Welcome to Eustis, Florida, where we're building a brand new 67,000 square foot storage facility. Eustis is about 45 minutes from our Bellevue location and just about an hour from our Palatka site. Needless to say, investors are going to benefit from our familiarity with the market, where we've both built and operated self-storage for several years. Specifically, we built over 100,000 square feet of self-storage of new construction within 90 minutes of this site. So we know the market inside and out. What we love about this property is that it's got strong population growth. Eustis is in Lake County, which has been in the top 5 fastest growing counties in the state of Florida, and Florida is the fastest growing state in the nation. Zooming into our specific location, there are over 4,000 residential units coming in within a 5-mile drive time, with over 1,300 homes coming in within a mile of our site. Being in the path of growth is critical to the success of any self-storage project, so that's why we love the population in Eustis. So the next thing is high barriers to entry. That means that there is going to be limited competition in a very tough zoning environment, and it's tough to get approvals to have self-storage built here. We had to specifically design this project to meet the strict standards, and our team is capable of not only doing that, but in a way that's cost efficient to the investors. Next is the site. It has excellent visibility from the main road and over 14,000 cars that drive by the site every day, which makes it an ideal self-storage location. And I mentioned our economies of scale earlier. We actually have over 5 properties in Florida, providing investors with boots on the ground experience and market familiarity. Not only do our construction crews have building experience here in this market, but we know that we can get really strong market rents, payroll and marketing efficiencies by putting yet another self-storage property in Florida in this market, and it will only continue to benefit our investors. But my favorite part about this deal is the unmet demand. We have over 300,000 square feet of unmet storage demand within 10-minute drive time of the site. And with rents over $20 a square foot, it's the perfect ingredient for a self-storage property. So with excellent growth, exceptional location, limited competition, high barriers to entry, and a strong demand, this makes a perfect self-storage investment.
Okay, so that gives us why we like this investment so much. And you can see one of the main reasons is it's one of the last parcels zoned for self-storage in Eustis, and that provides us with barriers to entry. But we're going to get all of that stuff later. I wanted to start right with the bottom line up front. These are our projected Class B returns for the investment. You can see we're projecting a 22.4% annualized return. That means that every year after we sell, after we cash flow along the way, you would expect to make 22.4% on the investment. And our target hold period is 6 years. Our IRR is 15.6%, and that would make an equity multiple of 2.35x, meaning you would just over double your money in a 6-year hold period. So meaning if you gave us $100,000, you would get $100,000 back plus $100,000 of profit and a little bit on top of that. But before we get into the investment, we're going to just quickly go through our investor disclaimers. We're not offering any tax, legal, and investment advice. Do your own due diligence. This is just a general overview. And always, any tax or legal advice, always consult with your tax and legal team. And if you need recommendations on folks that help you with that, we always have that. You can always shoot me an email and ask who we use. If you've just joined us and you don't know anything about Spartan Investment Group, I'll give you the down low on that. We are the founders of Spartan Investment Group. Scott Lewis is our co-founder and CEO. My name is Ryan Gibson. I'm the co-founder and CIO of Spartan. And together we founded Spartan Investment Group. We have actually several companies under the Spartan brand, Free Up Storage and Spartan Construction Management. And this is our leadership team that oversees all aspects of our companies. And over the years, we've developed 2 offices. Actually, our headquarters is in Golden, Colorado. We also have a small office in Seattle where I'm broadcasting from today. So our leadership team consists of seasoned storage professionals who are well-versed in operations, construction, asset management, and we're a vertically integrated company that plans to build this Eustis facility using Spartan Construction Management and lease and operate the facility under the Free Up Storage national brand, where we operate in over 12 states. And this is our team. Spartan has a deep bench of self-storage professionals with over 150 full-time employees. We're vertically integrated, handling all aspects of the operation, and together we've assembled over a $600 million storage portfolio, and we've been recognized by the Inc. 500 magazine and the Vet 100 for the last 4 years in a row. And we're also named as ISS's top self-storage operators out of the 100 operators that they rank, and we were the 36th largest operator in the United States. And specifically, we also were recognized by Best Places to Work. So people enjoy working for us, and we're one of the well-known brands and operators in the industry. To give you an idea of all of our self-storage facilities, we have 62 current facilities sweeping the United States. We have a concentration in Florida, Georgia, Tennessee, in the Southeast region, and then we also have a bit of focus on the Pacific Northwest. And we look for markets that are growing, including the Pacific Northwest, the Sun Belt, where the jobs, population growth, strong favorable demographics are. And the investment in Eustis helps us continue building our presence in the Southeast, namely Florida, where we already have 5 facilities. This gives you an idea of where our construction company is building. Now, our construction company is building the Eustis property, and we get competitive bids to make sure that their bid is good. But our construction company also builds for other operators. So they're actually out there. About 50% of their work is for other self-storage operators, not just Spartan. And they've built active construction sites all over the country. I believe this is looking at what they've done in the past, what they have currently going on, and some future plans. And there's over 16 development sites nationwide. Spartan Investment Group itself has a track record with 16 successful exits, ranging from our worst performing deal at 12.1% IRR and one of our most recent exits at 83.32%. We've never lost any investor capital, and we've never had a capital call out of the 10 years that we've now been doing business. We were founded in 2014. We've been around for about 10 years. Now, why we chose storage in the first place, people might wonder, like, why even get into this space? What is it like? And we chose this growing asset class in self-storage for 3 main reasons: easy to maintain, easy to evict, and easy to operate. But we also like that the sector has been recession resistant to big economic downturns in the economy dating back over 40 years. Black Monday, dot-com burst, Great Recession, and the COVID-19 pandemic. Self-storage really shined and did an excellent job. And if you don't know anything about self-storage, you might be wondering, why is it one of the best performing major asset classes over the last 40 years? And that's because people use self-storage for personal reasons: death, displacement, downsizing, and divorce. And this happens no matter what's going on in the economy. People are always on the move. People are always upgrading their family with having children, or unfortunately, there's the death side of things. And that's what creates self-storage events. And I like to ask people, if you've ever used self-storage, what was the reason why you used it? And usually the answer I get is I was moving, I was downsizing, or essentially having a life event. So that's 70% of our customer base. The other 30% is business use. Largely business owners, Amazon, Etsy businesses, sheet metal contractors, landscaping companies, real estate furniture staging companies, vending, food distributors, equipment storage, and many other purposes. And you probably are thinking like, hey, self-storage is being built everywhere. And you're right, it is being built everywhere. And that's because from the 1990s, where the average American used 2 square feet per capita, it's now over 6 square feet. So people are consuming more and they're using self-storage more than ever before. And we're trying to build and operate storages to keep up with this growing demand that we have for self-storage here in the United States. Now, here's our strategy to exit, right? So Spartan is that medium-sized fish in the middle. And we go out, we build, and we aggregate a big portfolio in the United States. And you can see that we go out and buy mom and pop properties. We buy off-market deals in land like this one in Eustis. And we build a portfolio that essentially gets consumed by the big institutional buyers like Blackstone, Merit Hill Capital, U-Haul, et cetera, where they're trying to get big portfolios purchased or one-off properties. We've also sold to 1031 exchange buyers, people who are just looking for a storage in their market, and many other different types of regional and national investment shops. Now, here's a little bit about storage, and specifically Eustis. We're 45 minutes from properties we already own. In Bellevue specifically, Eustis is just down the road from another free up site. And this allows us to capitalize on our brand's established reputation in the market, attract and retain diverse clientele, and we're also able to tap into our economies of scale when we deliver the new construction quickly and efficiently. We've already have boots on the ground. We can realize significant savings in procurement, labor, management, and thanks to our experience building in the market, we're able to do this all while maintaining consistent quality in our portfolio which we're known for. So we already have built over 100,000 square feet and hundreds of units in this market. So we know the pricing, we have the contractors, we have the economies of scale. And once the facility is open, we can leverage our existing infrastructure to unlock operational marketing and payroll efficiencies. And that, paired with the knowledge of knowing local market and pricing trends, this ensures a smooth, cost-effective lease-up, ultimately leading to higher margins and better returns for this market. So you can see a picture of the land there. We saw that in the video, but just wanted to give you an idea. This is going to be our 6th self-storage facility in the Florida market itself. Now let's talk about the business plan. So the business plan is quite simple. We're going to construct the facility. We're going to build specifically about 606 units, or just shy of 70,000 square feet. About half of that's going to be the indoor climate-controlled units, and the other half are going to be the more convenient drive-up exterior units that are not climate-controlled. And then we're going to lease up the facility using our Free Up Storage national brand. And then once we stabilize the property, we're going to sell it. Now, here's the timeline. We actually have already taken on the risk, and we own the land already. We've already entitled the land. We've got all the permits, and we've actually done some work on the property, which I'll talk about in a second. So we've taken the risk out of the entitlement phase. We already own the property. Now we're raising the cash to do the investment. So in June, we plan to break ground. So at about 30 to 45 days from now. And in June of 2025, we plan to complete the self-storage facility. Upon completion, we'll get a certificate of occupancy, put our national brand in place, and start leasing up the property. We expect that lease up to take through December of 2027. So over 2 years to lease all of the units to a 90% occupancy level. Then we've given ourselves a 3-year buffer to ensure that we can create a market around selling the investment as a stabilized property. So overall, that's the business plan: to buy, build, construct, and sell the facility after it's been leased up. And so one of the things that we ran into was this thing called gopher tortoises. So we've been entitling this property for nearly 2 years, And one of the things that we ran into is we had turtles all over this property, or tortoises. But we've already taken that risk out of it for you. So we've already got the land approved. But just a fun thing, we actually had to remove tortoises from this property. And you can see the gentleman on the right-hand side there holding a tortoise, one of these gopher tortoises. They actually burrow themselves deep into the ground. And we had to have all this environmental stuff approved and analyzed. And then we had to pay someone to go out and dig these tortoises up and move them off to a Club Med for tortoises. So these tortoises found an incredible home, and it allowed us to develop our site. So just to give you an idea of some of the barriers to entry we had to go through to build this property, which we're going to talk about in a second. But this is kind of a fun thing that we had to do. So I love the Ninja Turtle. So there we go. All right. So barriers to entry. Let's think about that. When you build self-storage, one of the things that's really critical is that people can come build behind you. And there might be 300,000 square feet of demand, but if there's more people building behind you, they're going to start taking away that demand, and it's going to create more competition. Eustis, when we approached them, number one, we had incredibly strict zoning requirements. And number two, this is the last parcel that they're going to zone for self-storage. So this is going to be one of the last parcels that you can actually build on in the market. And it's one of the last parcel zones for storage on the section of County Road 44. And so that helps us have a share of the road that doesn't have a lot of competition. And so we're in this enviable position of being able to break ground in what will be from here on out a very high barrier to entry market. And so the likelihood of competitors following in our wake is extremely low. And so Spartan has the opportunity to develop, be the dominant self-storage presence in Lake County, which is one of the faster growing counties in the state of Florida, and Florida is one of the fastest growing states. So this just gives us a barrier to entry. And I mentioned earlier, we had to go through strict design approval standards, and you can see our nice renderings that we've had of this property. We had to make sure this property looked really nice in order to get it approved, which also creates more barriers to entry. So I mentioned Lake County is the 5th fastest growing county in Florida, and it's fueled by a pattern of migration out of Orlando. So as residents seek that more affordable living option, Spartan site is located in the heart of that activity with over 2,700 properties that are under development across 6 different sites within a 5-mile ring of our property. So you can see here, there's multifamily and single-family homes being developed right here in Eustis. Now, Florida is the fastest growing state in America, and Central Florida real estate market is notoriously tight. So that population in Orlando, Kissimmee, Sanford, metropolitan area, it's increased by almost 55,000 people in just the year 2023. And so it's the largest population jump, the 4th largest population jump out of any U.S. metro that year. So with limiting housing available in Orlando, residents are looking north to places like Eustis to get a leg up on the property ladder, right? So as families and individuals make that transition, they require storage, and Spartan's storage facility will be ideally placed to meet this need of growing population. Now let's talk about the market strength. And if you're new to storage, we don't really want to develop anything that fetches less than $18 rents. Now, the Eustis market is perfect. It's getting about $20 rents, $20 per square foot rents. This is a good, healthy market for self-storage. And the competition's over 94% occupied. So that demonstrates that there's a robust demand for self-storage currently, and there's still 300,000 square feet of unmet demand in the area. And that demand is only going to increase as new residents build those 2,700 homes and flock to the region, allowing Spartan to command high market rents that will only translate to steady cash flow and lease up the property for our investors. Now, just a little side note, $20 is about 65% higher than the national average. And with 94% occupancy, it means that there's really no options in the Eustis. And as people move in, these rents are going to stay super strong. Our property is going to be built on a busy stretch of County Road 44. This is the main thoroughfare connecting the east and west parts of northern Lake County. And there's over 14,000 vehicles that pass by the land parcel every day. And our property specifically has 280 feet of highway frontage. And this provides exceptional visibility for potential customers. There's really 2 things that we look for in marketing. We look for really good visibility along the main road so people know us and they can book us on price and location. And convenience, people like to be around where they're storing their storage. The other thing we do is we drive really good Google reviews, and we do paid advertising to drive marketing to the site. And our facility specifically will be part of a new commercial corridor servicing the area, which include the Dollar General and an actual, like a corporate built 7-Eleven right there on the site. And that offers a convenient entry and exit points, both right and left turn access, right turn access. So it provides easy customer access to reach the property. And so all in all, I rate this site about a 4.5 out of 5 stars for visibility. The traffic count is, I like to see at least 10,000 cars a day. Ideally, I want to see 20,000. But based on this county road and not any other storage being built on it, I like to say that we're going to command the market here. So the combination of high traffic, excellent visibility, and direct access will allow us to attract and retain a really great customer base locally. Now, Eustis I mentioned, is in Lake County. It's about 45 minutes northwest of Orlando, and it's often nicknamed the City Beautiful. So Orlando is the front lines of the Sunshine State's rapid growth. And in 2023, it netted, again, huge population gains. And so Eustis is in the middle of a major regional growth pattern as families and individuals migrate to the communities of the North City. And it's nestled on the shores of Lake Eustis. That's where our property is. And the town offers over 23,000 residents easy access to nature, a slower pace of life, and being within reach of the vibrant culture and amenities of Orlando. And I would say around 55% of the residents work in Lake County, while other 30% commute to Orange County or Orlando. And major employers in the area include several major local hospital systems, and to include Advent Health, University of Florida Health, Orlando Health, along with Publix, which is a huge employer in the area. So you can see some of the statistics here. Population growth is just through the roof, 27,000 people in 2020, with 33,000 in 2023, and then continuing to grow through 2028. Now, the site itself is an institutional quality property. This is going to be about a 66,975 square foot property with about 606 units. Gross square footage is 76,000, and it's going to be built this year. Now, this property had to go through extensive design review process. You can see it looks like a nice little library, and it's going to feature high quality, attractive design and top storage amenities in the area that are unmatched in the local market. If you drive the competition or if you look at some of our competitors, you'll see that this is going to be the nicest property in the area. And it's going to give us a choice for better premium tenants and giving us an edge over the competitors to position ourselves for success. So I want to walk through the business plan on how we're going to lease up the property and how we've looked at the market rents currently and how we're planning to grow those market rents. So first of all, when we lease up a new property, we discount the rents about 30% to where the market is currently. So if you look at the rents currently in the Eustis market, the current market rents are about just a touch over $20 per square foot annualized for like-kind properties in the market. We take the most comparable assets to what our facility will be once it's delivered. Now, the first year that we open operations, our starting rents are going to be significantly lower than what the market is currently charging. This allows us to capture customers and lease up the property. Self-storage customers tend to be incredibly sticky, with our portfolio average at 30 months of occupancy stay. Their average stay is about 30 months. At the end of year one, we plan to increase the rents slightly on the existing customers, but we're really not planning on going to where the market is even charging for a property for just about 3 years. So you can see starting rents in year one, end of year one ops, that's year two, and end of year two of ops, which is effectively year 3 of the investment. Now, when you think about what our market increase expectations are in rent, we're planning on average over a 6-year hold to only increase rents by 1.42% annually, which is incredibly conservative. So the end of year 4 is the first year that we ever plan to only slightly increase rents above where the market is today. So that's 4 years from now. And then our terminal rents, you can see on the very far right-hand side, that is year 6. That is the conclusion of the investment, where we plan the market rents to be about $24 over what they are today at about $22.50. So we're only planning on about an 8.5% total rent increase over a 6-year hold period, which is very conservative, or about 1.42% annually. So that's how we think about the business plan and leasing up the properties, or leasing up this asset. Now, when we overlay that into a sensitivity analysis, and this is also provided in the offering memorandum, we look at 2 different ways to see how we can meet or exceed the returns that we project for the investment. The first thing we look at is what is the assumed annual market rent growth in a storage facility. So Right now, we're targeting that 1.42% that I discussed in a previous slide, which is very conservative, or only about 8.5% total rent growth over a 6-year hold. The second way we look at it is, what is your exit cap rate going to be? So in this investment, we're planning to exit at a 6% cap rate, which right now, self-storage is trading probably in the mid fives in our current market today for this quality of a facility that's brand new and Class A institutional quality. So that's how we get to your 22.2% return. Now, if the rents don't grow at all and we sell for a 6 cap, you can see up at the top there, that gives you that 14.7% sensitivity. Now, likewise, we do that for your equity multiple. We take the change in annual rent growth projected for market rents, and then we also look at your exit cap rate. So this gives you a nice look at how we look at underwriting and how the rents or your overall returns would vary. I mentioned what the target returns are earlier, but I wanted to go over them again. 22.4% return, 6-year hold, 15.6 IRR, and about a 2.35x multiple. Now, I want to talk about the debt and the equity. So we're putting about a 50% or a 49% down payment on the total cost. So very healthy loan. We're getting a 7.8% fixed rate loan. It's already been approved. The loan term is 5 years. They're giving us 3.5 years of interest only. And this is fixed rate debt. This is locked in. The bank has already approved the project. And so there's no ambiguity around our debt or our lending partner for this property. Now, sources and uses of equity and debt on this investment. So we're raising about $5.7 million of equity from our investors. So that the offering has been open for a couple days. We've already raised about $1.5 million for the investment. So we're going to top off this raise as the month goes on. And we expect it to be fully closed probably like first week of June. Now, the debt is going to be about $5.9 million. And if you combine that, our total sources for the investment's about $11.6 million. Now, if you look at how we're going to buy the land, we're going to spend about $1.4 million on the purchase of the land. We've already bought that. And we're going to have about $7.6 million of construction costs, $1.75 million of contingency and reserves, and $942,000 of closing costs, acquisition fees, developer fees, and so on. Looking at financial highlights, our stabilized DSCR on this property is about 2.23x, which is very healthy. Expects a gross income ratio of about 28.1%. Cap on cost is about 11.2%, very healthy. And then we're planning to exit the facility in 6 years at about a 6% cap rate, which is a very conservative estimate for where the market is today, the quality of the asset, and the growth in the region that we're looking at. Now, you'll see this in the offering memorandum, but I wanted to go through our break-even analysis. And you can see as you build a property and deliver it, so year one, I ignore that because that's the year we're building it. So the break-even occupancy isn't really reflective of the operations. But as you start getting customers in, you can see that break-even occupancy is going to start lowering as we bring in more revenue and we start bringing the rents up to market. And ultimately, our break-even occupancy is going to end at about 55% break-even occupancy. Now, let's talk about investor returns. So we have very favorable investor splits on this one. So the minimum investment's $100,000. And if you invest $100,000 to $499,000, you're going to get an 8% preferred rate of return with a 70-30 split to 14% and then a 40-60 split thereafter. And if there's an investment of over $500,000, you get a 12% preferred return, meaning you get 100% of any profits on the investment until you achieve a 12% return. And then it's a 70-30 split to a 16%, and then it's split 55-45 in the investor's favor. And that pretty much wraps up our financial section of the webinar. So if you're interested, you should have gotten an email by now. If you don't have an investor login, you see an email that invites you to the investor dashboard. Or you can simply just go to our website, spartan-investors.com. On the top right of the screen, you're going to see a link where you click Investor Portal, and it'll bring you to this page. And you can simply just click on that Create Account feature that's in the bottom right of the login. And then once you log in, you're going to see this investment free up storage Eustis. If you click on that gold link, it'll bring you to this deal room. And this investor dashboard, again, is where you can find everything pertaining to the investment, the projections, the financials, the PPM, the offering memorandum, everything. And ultimately, if you wanted to start the investment, you'd click Start Investment here. It would take you through the investment until you get to the paperwork. And then that would give you the ability to subscribe to the deal, and then it'll provide you with funding instructions. And you can see the funding instructions are actually right here in the deal room. And again, you can scan that QR code. That'll bring you to the investor dashboard. Or you can always just simply reply to the email that we received about the investment, schedule a time with one of our investment relations professionals, or you can always email me at ryan@spartan-investors.com. So with that, we're going to go over it's accredited investors only, $100,000 minimum. This is a first come, first served investment. And if you have any questions, I'm here tonight to discuss any questions on the investment. I've had a chance to answer questions in the chat window as we've gone through the webinar, but I'm here tonight live to answer any questions that you have. And I'm going to go ahead and get started here in just a minute, answering some of the questions that have already come into the chat window. But thank you for joining. So we're going to go ahead and open it up to questions. First question I have is, will there be a cost segregation study and bonus depreciation applied to the investment? And the answer is yes. We will be doing a cost segregation study and bonus depreciation will be applied. Investors share in that depreciation. That depreciation will be realized in the tax year 2024 because investors do not realize that depreciation until the facility actually opens, and that's the year we plan to open for business. The next question is the Class B investor returns for a 100K tier? No. The Class A investors are those that invest $100,000 to $499,000, and Class B investors are those who invest $500,000 or greater. And all returns are outlined in the offering memorandum and in the PPM. Can you provide a projected versus actual for your past projects? And also, what is your LTV for the investment? Now, this is a two-part question. Number one, if you email me, Ryan@Spartan-Investors.com, or you email one of the team members, Jack, Ted, or Rob, we can provide a track record with all of our past projects. The LTV for the investment is, I'm going to answer that a number of different ways. The loan to cost, meaning that the total cost of the project being about $11.6 million, and the amount of leverage we're putting on it is about 51%. However, when we build the property and stabilize it, the loan to value at stabilization is going to be about 38%, and the loan to value at completion is about 45.32%. So it depends on how you look at it, but those all provide LTV, LTC of less than 51%. What is the debt percentage, rate, interest rate, and length of loan? The debt is fixed, and it's been fully approved at 7.85% fixed rate, and the loan term is 5 years. Is this session being recorded, and will I get access? Yes, if you received an invitation for this webinar, we always send a replay. Is the 14,000 vehicles per day a current or projected number? And the 14,000 vehicles per day number is current traffic being realized at the property right now. What is to stop other competitors from building down the road or a few miles out of town? The city of Eustis doesn't not allow any future developments of storage. So we've secured the last parcel of land for self-storage. Now, adjoining towns or other cities may have competition. However, that competition may or may not be relevant. Because if you think about it, I live in Seattle, and let's say I lived in Mercer Island, and I had the last parcel there to build self-storage, and somebody built in Bothell. Well, it might not really apply to me because no one's driving from Mercer Island to all the way to Bothell to use self-storage. Likewise, in Eustis, the surrounding cities of Eustis, somebody might not want to drive out of Eustis to go to a property on another town. They want to go to the property that is the most convenient. And when you look at the over 2,000 homes that are coming in within 5 miles of our property, this is going to provide an immediate place to put their belongings and limited competition within the city of Eustis. So when you look at other cities and if they allow building, they might, but it might make it irrelevant because your customers are usually within 3 to 5 miles of the site. The debt prepayment penalties, are there any? Well, first of all, I want to say any prepayment penalty is a percentage of the loan typically. And so in year one, we have a prepayment penalty of 3%. That would cost us about $180,000 in totality, which is a very small portion of the project. If we refinance the property, though, with that lender, or we sell the property in year one, we don't pay the prepayment penalty. In year two, that prepayment penalty drops to 2%. In year three, 1%. Year four, there's no prepayment penalty, and any subsequent years after that, so year five. When do investor distributions begin? The investment is a ground-up development, so the distributions won't begin for about year three. And so I encourage people, if you're looking for cash flow, we have other opportunities that would provide better monthly cash flow for you. If you're looking to invest in cash flow, this isn't really a great deal for you. This one is for ground up development investors that want the best multiple, the best return they can get, but may not necessarily be a really good fit for cash flow. All right. Well, that is all the questions we've had. But if you have a question at any point in time, you can always email me at ryan@spartan-investors.com, or you can simply reply to the email that was sent to you with this investment, and either Ted, Rob, or Jack can get back to you on the investment. So thanks for watching and joining us on our webinar. We hope you join us on this investment, and we'll talk to you again soon. Thanks, everybody.